I think we should not be ESG oriented. I think we should be GS&E oriented. You're going after too little money. Okay, you need a bit more money. Make it bigger. You're not going to attract people by saying you're going to be an E&P company.
Hello, and welcome back to the VUCA Insights podcast, where we talk about investing, entrepreneurship, and growth mindset. Today, I have a very special guest with me. He's none other than Dr. Kenneth Pereira, CEO, co-founder of Hibiscus. Welcome to the show, Doctor.
Thank you, John.
So happy that you could spare us your office.
Most welcome. Hope you are comfortable.
Very, very comfortable. You know, we were admiring your lights and how you renovate this place as well.
It was only recently that we did some renovation.
I see. Okay. So for those of you who don't know, Hibiscus Petroleum, one of the independent oil and gas companies in Malaysia. But I'd really like to get to know you. You know, Doctor, I mean, you've got a 39-year career spanning roles at BP, roles at Schlumberger, roles at, BHP Petroleum. Maybe, what was a 15-year-old Dr. Kenneth like? What was your outlook in life, in a way?
Okay, firstly, I need to make a correction. I was in Schlumberger, I was in Sapura Energy, I was not in BP or BHP. Okay, so just to kind of...
Sure, thanks.
I was also in a company called Interlink Petroleum.
Yeah.
A 15-year-old Dr. Kenneth was living in Penang.
Okay.
I was in between the La Salle School, Penang, which does not exist today, and I was maybe between La Salle School, Penang and St. Xavier's Institution. It was an interesting life in Penang. You could cycle around the island in 5 hours and not get knocked over. The roads were still pretty, I think, not as congested as they are today. And I think it was just a lovely place to live and a lovely place to grow up. And we did a lot of stuff outdoor, which I think gave me a foundation to enter the industry that I did. I was in the Army Cadets. And St. Xavier's was one of two schools at that time in Penang, which had Army Cadets. And they took us into the wild. Sometimes we would spend time in the jungle and all of that, learned how to shoot and all of that. So it made you kind of comfortable with the outdoors, made you a little bit more confident of yourself in tough conditions, sometimes in the dark at night, trying to cross a little bit of swamp and all of that. Gave you, I think, helped you build a little bit of character. So it was a couple of years in the Army Cadets. Highly recommended.
Nice. I think children these days hardly get the chance to go outside.
Unfortunately so, yes. They think they can be an Army Cadet just looking at how to be an Army Cadet on YouTube.
That's right.
Yeah, so, no, honestly speaking, those are... and the friends you make from having those difficulties, they're my friends today.
Yeah, life friends, right?
Those are life friends because you laughed at each other, you kind of cried a little bit also, got scared together, all of that. Yeah.
Correct.
So, yeah.
When you decided to pursue tertiary education, was it already a vision that you would go into oil and gas, or did you what was the impetus for you to go into oil and gas actually, in a way?
Oil and gas only happened after I'd started my engineering studies.
I see.
It happened that we shared an apartment, me and a few of my friends in London, where I used to do my training, my industrial training. I went to university in Bath in the UK, and I used to spend 6 months every year in industry. It was a 4-year course at that time for engineering. So I used to stay in London, and I was sponsored by a company that makes vacuum cleaners. You may have heard of the name Hoover.
Oh yeah, Hoover.
Yeah, Hoover. So they were making vacuum cleaners. I was an undergraduate trainee with that company, and I shared my apartment with some friends, and one of them who stayed with us during his breaks actually worked for a company called Schlumberger. And that's how I came to know about Schlumberger. I came to understand what the oil and gas industry did, that there were field engineer jobs like this where you could go and work 3 or 4 weeks, and in the field, and then come back and have 2 or 3 weeks holidays. And earn some reasonable money at that and get to travel. So that kind of like got me interested in this industry. So when I finished my studies, I only applied to 4 companies, and all of them were in the Schlumberger group.
I see.
So today Schlumberger is called SLB, but at that point in time there were four big divisions of Schlumberger, and I only applied to them because I was like determined that I would work for
Schlumberger.
this group.
Understand.
Yes.
So the Western GECO and all.
Yes, at that time I didn't go for the offshore groups, so mostly the ones that did all the oil field, the real oil field services, not the seismic stuff.
I see.
Yeah.
I see. There was a point in time where you were in Sapura and you were doing more of telecommunications,
That's correct.
right?
Yes.
Did you see like a very big skill set change that you needed to, or do you think it was very similar to what you have, all the experiences you've accumulated prior to that?
What actually happened was at the end of my life in Schlumberger, after about 9 years I think in Schlumberger, I decided I wanted to leave for personal reasons, family reasons. Actually, my mum wanted to spend more time with my parents.
Understand.
I was overseas. I was all the time overseas with Schlumberger. So I wanted to spend a little bit more time with the family and come back to Malaysia. At that point in time, we wanted to do some studies in this area, but instead I chose to do an MBA. Okay, and it was going to be between technical studies in oil and gas or an MBA. So I picked an MBA, a Cranfield MBA, and my thesis for the Cranfield MBA was to build an oil and gas services company in Malaysia, actually. And the only reason was because I knew the background about oil field services. And when I studied the Malaysian environment, at that point in time, early 90s, there were no really large oil and gas services industry, and most of the companies were agents of foreign companies.
That's right.
There was really no big investment. So clearly there was maybe a competence gap, maybe a risk gap. People were not really concerned, were kind of concerned about investing in this sector. So I wrote a thesis about how you can do something like this, build an oil services company. And it was there on my shelf for a little while. And then I happened to be fortunate enough to be the general manager of corporate planning in Sapura. So after we sold our telco business, I made a pitch to the owners of Sapura at that time that maybe a place to go into would be the oil and gas services business. And Sapura is a very entrepreneurial company. So they looked at it and they said, okay, let's put some money behind it. And so I was employee number 1 in Sapura Energy.
Nice.
And we started Sapura Energy.
Okay.
Yep.
And
that's the story behind Sapura Energy.
I see. I mean, there's so many paths that I want to entangle, but probably I take this path first.
Yeah.
You mentioned about that very interesting part about, you mentioned there's no, in a way, legitimate oil and gas services company at that point of time.
At that point in time,
That's right.
very early days.
Very early days. And
but there was a genuine desire by Petronas.
Correct.
To actually create some serious champions, local champions in this sector.
That's right.
So you could see the vendor development programs coming out.
The VDPs,
you could see a lot of stuff coming out. So it was just a matter of getting real local content and solid investment.
Understand.
And then with some competence, get it done.
Okay.
Yeah.
So fast forward to today.
Yes.
How do you think that has progressed? Is it progressing to what you envision it to be? Or, I mean, with positivity, or do you think that there's still a lot of gaps that we need to catch up in that ecosystem part, actually?
I think mostly we have gone a big circle, maybe. And you must understand that along the way, Petronas has been very instrumental in the building of some very large companies.
That's right.
So, and I think some of them have been managed well. Some of them maybe could have been managed better. But I think in terms of support from the regulator in Malaysia, I think you can't fault that. They've
definitely.
really been very supportive. And I can't imagine the billions that Petronas have awarded in terms of contracts to the local players to make things happen, to come in with favorable contracting structures.
That's right.
To allow vessels to be built. There's so much of stuff. And I think the number of people involved in the industry today who know about this industry, I mean, it's in excess of 100,000 people. Okay, so that competence was built. And some very good people. And not only are they in Malaysia, they're also overseas. So I think, has there been a big evolution? Yes, there's been definitely.
Yeah.
Okay, maybe some of the corporates have lost their way a little bit.
Fallen in hard times.
Yeah, and it's because of the cyclical nature of the industry. Right. Sometimes you're exposed at the wrong time in the wrong place. But in terms of the hardcore competence, Malaysia is becoming more and more a hub nowadays, and for energy companies and oil and gas companies. And you only have to look at the competitiveness of bids and licenses. When Petronas puts a license out there to bid, it is not a small number who are bidding, it's a large number.
Correct.
And it's not small names that are bidding, it's big names.
Yeah.
So they're all coming back to this place.
Yes.
And I think that's just a reflection of where this industry has evolved to.
Nice.
Yeah.
I mean, it's good that you bring that kind of context, because today when people claim oil and gas is dying, actually Malaysia has somewhat built into a heartland, in a way.
I think so.
Yeah.
I really believe that.
Yeah.
And I think we are positioning really well.
Great.
Okay,
Great.
we're bringing big names. Somehow or the other, Petronas is formulating strategies and marketing the country well.
Yeah.
And it's all done below the radar. And you can imagine, to bring one person into the country, they must have visited 10.
Yeah.
Okay, and then finally convince one. So a lot of work is done behind the scenes. We see the outcome, but to me, fantastic work.
Wonderful.
No, really, the names. Look at the names that are coming into Malaysia now. BP is coming in. ENI is coming in.
Yeah.
Total made a big investment in Malaysia, Total Energy.
Yeah.
So these are not small names. Okay?
Even Aramco down south on the downstream.
Exactly, in the downstream too.
Yeah.
So these are not small names, and I think somehow or the other, it's people want to be here.
Kudos to that.
Yeah.
So Doc, since we're already on your MBA path, your PhD, you did your PhD, and it's when I was reading excerpts of it, right, it's really a mimic of what Hibiscus really is. Is that correct, that I assume?
When I did my MBA thesis, I talked about oil services, right?
Yes.
And it seemed I came out with kind of a framework, like how to build a services company. And mostly you're talking about the risk management, at the start, and the planning at the start, okay? Now, when I wanted to do the same for the oil business, the E&P business. So I decided to get going on this, and then I said, okay, let's do it properly.
Yeah.
Okay, so let's do a doctoral course, a doctoral studies course.
Yeah.
And then and make this my thesis. So then I started the thesis. The first year of a doctoral course is mostly learning the tools. You learn research methodology, you learn critical thinking, you learn how to do all of that, all the tools. First year, and then theoretically at the end of the first year, you get a master's degree in this area. And what happens next is, you then put up a research proposal, and then you end up, hopefully, over 3 or 4 years, just diving deep into it, and you end up, I would say, coming out with something. It might be just a slither of new information, but you add to the current base of knowledge. That's the objective. So I started, okay, and I was very clear from day one what was my goal, but I had to do this first part first. So we did that, learn the tools. Then we had to put up the research proposal. I put up my research proposal, and it was quite a worrying process, because when I went to you have to present your research proposal to see if the university will accept it. Okay, you got to kind of do a little presentation. So there were about 30 of us, and the process starts on a Friday, and it's supposed to go over the weekend. And then you draw lots as to who does first and who goes last and all of that. So I went along. And I pulled number 3. Okay? So, and you're supposed to have like an hour, 45 minutes to an hour to present your research proposal. And we started at 6 in the evening, it's supposed to end at 8. So I thought, oh, wow, great. I'm going to be first on Saturday morning. Good thing, not the end of Friday. I'm going to be first on Saturday morning. So along goes the first person to present. And the university, the head of this research selection committee, gave this person, it was a guy from Sri Lanka, all of 15 minutes and said, no, we don't need this. And he was shut down. He said, you will end up with a master's, we don't need this, because what I didn't realize is the university is only a set number of people who they can, kind of appoint as supervisors and all of it. And that's money that they are investing to ensure that you get to the, they're going to put this effort to support you, and they want something good at the end. So, and I said, oh my God, this guy's just done in 15 minutes. Now what about me? Okay, I might be now on the last slot on Friday, the worst thing of all. And then the next one was a lady, actually, happened to be a Malaysian lady. She went and presented, and she lasted all of 10 minutes. I mean,
brutal.
It was brutal, only because the area that she was researching was not that it wasn't interesting. It was just that there wasn't enough sample size to, she wanted to do something that had a very small sample. And so the university said, whatever you find is not going to be valid, because there are just only 2 of such type of people in this industry around the world now, so it's just not worth it. And so within like half an hour, it was my turn. And I said, oh my goodness, we should be done in 10 minutes. I'm going to get the same treatment, But I started, and then she let me continue. And maybe she felt bad. She'd already cut 2. So she felt maybe she had to end the week on a high or something. So anyway, I got through my research proposal. And that's how this paper got done.
Wow.
Okay, and then so my research proposal got through. Then I was fortunate enough to have a very, very good supervisor allocated to me to help me along the way. And I started it, and it was to do with how you create oil and gas E&P companies, that are small when it starts. And off I started and got some help, and then I was interviewing people and doing all the process, okay. And then halfway through, this is maybe 1.5 years down the road, panic attack, because I realized my title, which I'd submitted 1.5 years before, was not right, actually, because the most important part of my title initially was Startup and Growth Strategies of Initially Small E&P Companies. After I'd done a whole bunch of interviews, I understood that actually startup and growth is not the important element, are not the important elements. It's survival that is the most important.
Specifically for the
I think actually any industry.
Okay.
After you start up, it's all that honeymoon period of startup, raising money, business plan, everybody excited, but there was a word missing in my title, and that word became more and more important. It's how do you survive? And especially in an industry that was cyclical in nature, oil price up. Every one of the CEOs I spoke with, and I was fortunate to speak with some good CEOs to get some of their knowledge and try and get this all condensed down into a research findings, right? I then had to go back to my supervisor and to the head of school and say, time out. Need to change title. Rewind, change title. And I was fearful of this, actually. I was thinking, oh my God, don't tell me they're going to make me start again and go through all the whole process again. Yeah. But they just were so accommodating. They said, this is exactly where we hoped you would get to, where you understand that actually you had not been, very, very comprehensive initially. So they were very good.
Nice.
So they let me change the title, and then I felt more comfortable, and then I really was confident.
Nice.
So it added a bit more time, because now I was also collecting information on survival. So yeah, it was just the most valuable part came about from that part of the research.
Nice.
The startup and the growth, I think those are the easy bits. The difficult bit was the
survivability.
And that was, it's an afterthought. And I'm just so, you know how you try to, many times in life, right? If you have a problem, you just try and sweep it under the carpet, pretend it doesn't exist. I'm just happy at that point. I was just so concerned that I'm going to do all this work for 3 years, and it's just a waste of time, because actually the best part of my research is not going to be in the book, because it's not in the title.
Correct.
So I thought, okay, now change the title.
Yeah.
So we can use a lot of this. So we ended up, so I had to change it, and then I understood that you can't be so broad about strategy. You had to be specific about strategic actions. It's a difference between strategy and strategic actions.
That's right.
So strategic actions was a lot more specific, because I had a lot of valuable advice given to me, and that's not strategy. Those are strategic actions. What people take, what people do, what people think they should. And it was just a very, very interesting part of the whole process. I would advise anybody who wants to start a business, go into a structured learning process to actually plan. The most important thing is pre-plan and pre-plan and pre-plan and just get into a thing, mean that you are actually all the time having to think your business model again and again and again. Yeah,
That's very good insight. I mean, like, if you look at the history, even for PayPal,
yeah,
they started off with just, their big idea was really Palm Pilot transferring money.
okay. As simple as that.
And simple as that. And they needed to pivot. I mean, PayPal, what we know today, is so different from that. I mean, that was the first thing, as you were narrating this story to me, that was the first thing I thought about,
Fantastic,
because you as a business, sometimes, or rather, you think you know what the market wants. But when you get there and then you discover the ecosystem, you realize, oh no.
Yeah. And that process also has, under the guise of a student, trying to research a subject, I was able to meet people and start building a network in the industry in different parts of the world, because we didn't have this industry here.
Correct.
So there were people in Australia I interviewed, US I interviewed, UK I interviewed. I interviewed people in English-speaking places, just to make life easier. And it helps that this industry is generally an English-speaking industry. But it was very valuable process.
How much did you glean from that and still practice today at Hibiscus? Because I'm pretty sure you learned a lot from interviewing all this. And are those strategic actions and insights still applicable today from what you've learned doing your PhD?
Well, I can't say I'm going back to my book every day. No, I'm not.
Okay.
But initially, when we were building our business case, it was very helpful because we had like hard data, I would say, things to think about, technology. Many of the companies when we were doing this, many of the companies were pivoting around the technology of two new technologies. One was, of course, what was happening in the US, the fracking and the horizontal drilling. And then the other one was, the other technology was 3D. The 3D, because of the, I would say, the super enhancement of computing power, the type of imaging you could get from 3D seismic work was improving a lot.
I see.
So those were very kind of a big technology pillars that built companies, actually. I would say today, because of that, I'm always thinking, what are people doing? I'm always like not kind of grounded on, this is the technology or workflow we have to follow. I always kind of encourage the team to, we just think outside the box. Yeah. How do we do things?
How do we simplify things?
Yeah.
How do we
without taking big risk?
Yep.
But how do you kind of just do this?
Understand. I'm going to relate that to probably when you started Hibiscus, it was a SPAC, and maybe for some of the audience out there, they may not really understand what a SPAC is. Maybe from your perspective, why do you think it was? What is a SPAC, and why do you think it was the best way to start Hibiscus?
Okay, I think SPACs are good things.
Okay,
but I think that the people who promote SPACs and the banks must do a very good job in ensuring the quality of the people who are the main prime movers in the SPAC know what they're talking about, I think, and the boards behind the SPACs must be important. Firstly, let's talk about why SPAC. Okay, so this was a industry where you need a certain amount of money, okay, and there's an extraordinary amount of risk. Okay, the risk can be the technology, the countries you're in, especially as a new company, you don't really know what you're doing. You don't have all the skill sets available. You can't attract people. That's the problem. You can't convince governments and regulators. These are the jewel assets of a country. You're trying to get a stake in an asset of a country. So a lot of things to think about. Okay, so when we first started, we had a very simple plan. The simple plan was, okay, let's raise some money. Let's go and take up a position, not the operator. Let's try and make an investment with somebody and hope that somebody is lucky. He drills a well, he or she drills a well that is going to make a big find, and then somebody will come and buy us all out. That was the business plan when you start. Because at that point in time, remember, 2009, 2010, 2011, it's just after Beijing Olympics, and I remember the oil prices were just crazy high, 120, okay? They were very high. So at that point in time, to go and buy production is not easy, okay? So we ended up saying, okay, we'll have to go into exploration. We'll take 15% here, 20% there, 30% there, all of these type of positions. And hopefully one of them will be a big monster oil field, and we can then all cash out. So we start that way. Then we think, okay, what is the structure? When we started looking for money, there were about 3 private equities that came and said, okay, like your profile and all that, your team and all that, why don't we do an 80-20? Private equity back you to a certain amount of money, and then 20% your management keep. And so we started that way. Then we realized that actually the way private equity works is you go around the world looking for something for them, then you take it to them, then they go through all their investment committees, and then if they decide to do it, then you do it. So actually you're not the decision maker actually. You're just a business development person running around the world and doing this work, okay? And every month you go and ask, can you get paid? So then we decided, let's look at other financing structures, with more agility, more flexibility. And the SPAC structure was something that looked interesting. And it happened that just the previous year, the SC had been developing the framework for a SPAC structure. So we went in and spoke to the SC and said, this is what we want to do. And they had to understand where we were coming from. We had to understand where they were coming from, what they looked into. And finally, we got through the consultation process, we got into some kind of meeting with the minds that we could get this going, okay? Then the difficulty also was like to convince our bank, the bank sponsoring at the time, whether the investment bank, whether they'd help us get this thing going. So they too, it was just new ground for everybody.
Yeah.
You know, all the documents were freshly written. The structure was developed in a room, in a house kind of thing, and we developed it. And being the first, again, you go back to your research that you've done before, and it really helps you because you kind of really address it, and you address the hard points, you know. And we built it all up, and we built that structure and developed the documentation and all of that, thought about the tax structures, all of these things. Really bit by bit, just every building block, put it together. And then you go out to the market, and we were just, we did one very important thing. Prior to going out, and I remember 3-4 weeks before, it was 2010, December, early December. So we are thinking that by the end of December, we are going to put this into the SC for review, okay? And we went on a little, I would say, it's not really a roadshow, but we went to talk to investors in Singapore saying, if we had something like this, do you think there would be interest? And there were 5. There were 5 investors we visited. I visited it with Joyce. 2 of us went, and we just went and Joyce Vasudevan, our co-founder.
Yeah.
And she and we just went, and we were given some incredible feedback.
Nice.
Each of them, we just told them, and we went with the 7-page flyer. We went through 7 pages, and we said, this is what we're thinking about. These are the people, and they were thinking, no, there's a hole in this. There's a problem here, and they gave us feedback. And we came back, and with 4 weeks left, because we had a hard deadline in our mind that New Year's Eve this thing is going in, come hell or high water. We kind of have this in our mind.
Yeah.
And then we preparing all of this documentation, and it was like real countdown. Okay, we had a deadline in our mind. We wanted to get it done, and we got this feedback. And one of the things was, you're going after too little money. Okay, you need a bit more money. Make it bigger. You're not going to attract people by saying you're going to be an E&P company trying to achieve $50 million. At that time, the SPAC requirement to list on Bursa was 150 million new money. They told us, go for double it. Try to double it.
Nice.
Okay. So we had to come back and revise our entire structure. At the same time, build some flexibility into it so that in case we didn't get there, what would happen? Okay, supposing we only got to 90 million, or 80 million, 75 million, how do we make the structure work in different scenarios? So that took a bit of time. Eventually, we got 83 million US, I think, at that exchange rate at the time was 83 million.
Yeah.
But that was invaluable feedback.
Nice.
We doubled. We then, our 7-page flyer became maybe a 20-page flyer, 15, 20-page flyer.
Yeah.
And then we had something that we thought we could talk to investors about.
Wonderful.
So that was really the process. And then you can't believe what happens, because we had this hard deadline of 31 December. Something like in our mind. And the Prime Minister then gave a public holiday on that date. So if I remember, it was because Malaysia won the AFF.
Oh, the football.
The Suzuki Cup or something
Yeah.
And I remember, oh my God, we got 1 day less in this whole process, so we got to get it now done by the 30th or something like it's something like that. And it was we were a day short.
Okay.
And then but anyway, we got it done. We got it submitted. It was all done.
Yeah.
And that was it. Yeah.
Now you're seeing this popularity of spec has just like completely just died off. And I think going forward, Doc, would you advise that what kind of business models would still suit a spec? I mean, thank you for the great insights, narrative, raise more money and all that kind of thing. But going forward, how do you think this spec vehicle would benefit other people in a way?
Yes. Malaysia doesn't have a highly developed venture capital market. Okay? Let's say you would like to become an entrepreneur and you want to raise 500 million ringgit. How do you do it?
Very tough.
Very tough.
Very tough.
But through a SPAC, there is a way. Okay? There is a way to do it. 2 or 3 people, a small business plan, the CVs. If you can convince the investors, and the investors are protected, the rules protect the investor a lot.
I see.
And you can do it. And hence, you know, but the only thing I would caution is this. You must not copy somebody else's structure. We developed our structure, okay? And it was because of what we wanted to get done.
I see.
The subsequent SPACs mostly replicated our structure.
I understand.
Okay? They just thought, oh, here's a formula.
Copy and paste it.
Copy and paste, use the same DCRs, all of this. Okay? So all I would say is my guidance would be work from first principles.
Understand.
Yeah.
Rather than just copy and you don't even know whether it's relevant or
you don't know why many people don't know why we did certain things in our structure. We know, but they don't know. Okay, and there were also some provisions we put in there, which we had to get waivers for because not normal listing rules. And I don't think people even thought to put these in, but it became very helpful because we did a risk analysis and said, okay, the very famous paper from Harvard. Why do 9 out of 10 SPACs fail? We looked at that and we went through it like a sieve. Okay, why did these SPACs fail? And they failed because of this, and this is what we have to stop. Okay, and that's I think it was a very, very helpful thing. Wow. And when you and again going back to the research, you know, if you have a research kind of mindset, you have people who do detailed work. Okay, and at that time our team. Myself, Pascal, Joyce, all detailed. Pascal is also another PhD. Joyce, a very detailed person. Okay, so the level of work that went in the background work, which nobody ever saw, why we did certain things and why we did not do certain things.
Understand.
both were well thought through. I think that was the fundamental. Okay.
Wonderful, wonderful. I mean, not many specs survived in Malaysia. Sad to say.
Only one.
Yeah, that's right.
Yeah, so far it's only been us.
Yeah, yes.
Yeah.
So maybe let's go back to basics, and I think for the benefit of the audience, can you briefly or concisely describe the specific niche where Hibiscus is? I mean, you've got the upstream space, exploration and production, you've got midstream and you've got downstream, but you specifically chose more of a brownfield approach. And for those audience understanding, brownfields are like assets that are already producing rather than you go and do exploration yourself and all that kind of thing. And I know you're moving more and more towards somewhat in a greenfield, but maybe can you take us through that thinking, and is it related to risk in a way, de-risking?
We started in 2010, 2011, because of where the oil price was. We were not able to acquire producing fields. Okay, it was just too expensive. Oil price at a very big number, and all these assets producing. Nobody wanted to sell anything, and then so we took up positions in exploration. We had to start there. We had to. The SPAC rules allowed you 3 years to find an acquisition, so we had to do something. So we went into exploration. We made a discovery in Oman in 2014. So we achieved certain amount of stuff, but in 2014-15, when the oil price started falling, we realized that actually it would be less risky for us to buy an oil field than to develop the discovery we had made. I mean, the discovery would have had construction risk, cost overruns, trying to build something in a foreign country, all of that.
Yeah.
So we just thought, why not we just try to buy an asset? We then were fortunate enough to acquire the Anasuria asset with Ping Petroleum. Together we bought 100% of it. And it was at a time when most people were, it was a very contrarian thing to do. Oil price was just falling, on a weekly basis, and most people were waiting for it to bottom out. We went ahead and made an acquisition, and it turned out to be the best thing we did. We learned how to do an acquisition with large companies. That negotiation and sale was done with Shell and ExxonMobil. So that taught us how large companies do their M&A work. Okay, what are the red lines for them? Most important thing you learn again. What are the red lines for them? Don't cross this line, type of thing. So in terms of in a negotiation, in how you in the clauses you want in an agreement. So we learned that through that process, and then we also happened to get an asset that was joint operatorship in an asset together with Ping, in operating in the North Sea, and the North Sea is a mature basin. Very tough regulatory regime, very tough from a health and safety perspective, very tough from an environmental perspective, and a lot of competence required to work there. So when we acquired the company, we acquired some people also. We suddenly got a whole bunch of people trained by Shell. Shell was the prior operator, so they transferred over to us. Suddenly we had a different level of competence. We were a North Sea operator. We had people who kind of worked and were trained by one of the majors. It was a shift in the entire profile of the company, which we would not have been able to achieve had we gone and done our own development and a lot of the pains and lessons learned from all of that. So we we were getting cash flow. So we were then a bit of breathing space as a company. After we did our first transaction with Shell, 2 years later, they were selling an asset in Malaysia. And clearly the fact that they worked with us again meant that we didn't upset them the first time out when we did the first deal. So they were happy to work with us again. And this time, it was so much easier because we knew what are the clauses in the agreement, what can they take, what can't they take, kind of thing. So we were able to close the transaction in Malaysia a lot sooner, very fast actually. That was the North Sabah fields. And once you've done a couple of transactions with large companies, you automatically get on the invitation list.
Understand.
with when other large companies are doing their sales in a particular area of the world. So the same things happened again and again.
Because you've built a level of, like what you said, competence. You also built a reputation in the market that, you don't want to shortchange these guys when they buy,
I think we understand how that there is a fair deal, to be done. These companies are not large companies because they give away things cheap.
That's right. Yeah.
But you got to find value in your own way, from your own strategies.
Very, very nice.
So that's how you got to do.
Yeah, I started my career building sulfurious actually.
There you go.
My first wellhead was Jacket E, which is the last one.
The last one. Yes.
The last one before North Sabah.
Yes.
Got handed over to you guys actually.
There you go.
Yeah.
There you go. So it's a wonderful asset.
Yeah. Yes.
And and a good team of people there also.
Definitely. Yeah, I worked closely with those guys there back then. Okay.
Yep.
So now going forward, would you see Hibiscus more, knowing that this brownfield has the risk and all that kind of thing? Would you be going more towards a brownfield acquisition like your Maharajalela kind of type of M&A, or would you more branch it into more of a greenfield kind of approach in your perspective? Now you've got cash flow and I've got breathing room. Now you understand fields better. So what would be a more general 50,000 feet strategy approach going forward for Hibiscus?
We have got a hub strategy in mind. We've got several hubs around the world. We have 2 hubs in the UK. Let's start in the UK. 2 hubs, Anasuria and Marigold. We have 2 hubs there. Anasuria is a producing hub. Marigold would be a greenfield development and tying back to an existing structure. That's the UK. In Malaysia, what has happened is we bought the PM3 asset from Repsol in 2021, 2022. So what happened is now Petronas is working towards the creation of a hub there. In 2022, we closed the Repsol transaction. When we closed the Repsol transaction, it was a license that was valid, had a 5-year life until expiry. It was supposed to expire in 2027. The prior extension given to Talisman prior to us taking over was for 10 years, from 2017 to 2027. And when we got into the asset in 2022, it wasn't long after we started an engagement with Petronas to see whether the license could be extended so that we could plan an investment strategy. Whatever you plan to do in 2024, 2025, your payback is going to be way past 2027.
Definitely.
So we wanted to understand from Petronas what's the plan. And we started engaging early. And the word I have to use is blessed. The only word I can think of using is blessed, because we were given 20 years as an extension.
That's right.
So that takes the license from 2027 to 2047. And that license extension, together with the PKNB extension, which was the PKNB new award last year for the 4 fields that had been discovered for gas, that makes that whole PM3 area now a gas hub.
Nice.
And for the first time, with those 2 licenses, PKNB and the extension, you get the feeling that Hibiscus can be here for 20 years.
Nice.
We are going to be providing gas. Everyone knows that gas is going to be here for a long time. Vietnam and Malaysia count on this gas. So we provide a lot of the gas going to South Vietnam. We provide a lot of gas coming to Malaysia every day, about 220 million scuffs a day. So when Petronas did that for us, they were helping build a hub, but indirectly also helping to build Hibiscus actually for the future.
Nice.
So that just gives me a very warm feeling.
Nice. No, I mean, thanks for sharing from that angle, Doc, because for an operator, your key strategies are always behind the capex and the willingness to commit. And if you don't get that kind of time frame, right?
Yes.
No
You
one,
can't
you
commit.
can't.
You can't
It's
commit.
like, how are you going to lay your pipelines
Yes.
or whatever?
Yeah, exactly. You can't even, you're thinking then about day to day.
Yes.
Now we can think decade to decade.
Correct,
You know,
correct.
so that's completely different.
Understand.
So that takes you a step up in the game, and our planning people now become even more important.
Great.
Our people for funding become more important. Banks become more important. Until 2021, 2022, actually 2022, we never for the first 10 years of our life, we never borrowed a dollar. Okay, everything was equity or cash flow driven.
Yeah.
Okay, after 2022, when you start seeing big assets, long-term time spans,
Correct.
then you have to think about leverage and how do you manage to get things done.
Yeah. It's more of a utility DCF kind of game, right?
Yes, correct. It's starting to change now.
That's right.
Yeah.
That's right. If not, it's prior to that, it's just like keeping yourself above water.
And different type of thinking in the company.
Oh, definitely.
You know, different thinking, not tactical, but strategy wise.
Correct.
Strategic.
So here is I'm gonna make a statement, and you see whether you agree or disagree with me. If you were to go into a brownfield producing asset kind of acquisition, there's always going to be a challenge in between how much are you going to pay for it and how much money you're going to spend to debottleneck or to spend to spruce it up, for the lack of a better word.
Yep.
Versus that of developing a greenfield. What are your thought processes in between the two? How do you balance that? It says, wow, if I'm going to pay this much for a brownfield, I might as well just go for a greenfield or something like that. Is that how you guys think? Or is that totally out of line?
No.
Okay.
I think there are a lot of considerations.
Okay.
I think you start off with your rationale for looking at a certain asset.
Okay.
Why are you looking to buy a certain asset? We don't bid everything we see. Okay, first thing. and because one, you just don't have enough money. Second, you just don't have enough resources
Understand.
to do a good job. And you must also think about what happens if I get that asset? Who am I going to put there? Okay, have I got a team ready to go in? I need maybe, 6 to 10 people in all the core areas.
Yeah.
I need them to go in, and I need to have trusted people because I'm buying a $200 million asset. I got to put these people in. They must be quality people.
Competent.
And competent, quality, understand what the group needs and all alignment and everything. I can't just go and employ 10 guys and say, off you go and work as a team. No, I need to be sure of the team going in even before, So normally our process is if we are looking at an asset, we already know the people working in the bidding phase are already the people identified to go in or play a big role in it.
I see.
Okay? So those people are in very early. Okay? What does that mean? That means that when we see good people, we employ them even if we don't have a job for them. Okay? If we see a good technical resource, we will employ that person because we need to have a little bit of buffer. Because when you need that person, when you need a good person, you're not going to find a good person.
Exactly.
Okay? A good person is just not there. Okay? So when a good person becomes available, invest in the person. It's the most important thing I've learned in life, actually. You never find the right person when you need the person. So if you see the right person, find the right job for the right person. In due course. Important.
Right.
Okay? So how we think about it is we have a reason. Let's just take the last example, Brunei. For Brunei, it was an idea that the assets there have been in the hands of large companies for a very long time. Okay, there must be some opportunities these large companies are not pursuing. There must be in that portfolio of assets. There must be. Okay, now there are two choices. You look at the country and you say, how many players are there in the country? 3, 4, and 5 maximum. Then we say, you know what? If we get in there, we could be significant.
Understand.
We could make an impact. So we tried our best to secure an asset. We engaged with Total. They ran a process. We engaged with Total early. They ran a process, and we were fortunate to come out the other side as the winners of the process. The whole thing took maybe about a year.
Were there many bidders together with you?
We understood that it was a competitive process.
Understand.
But After about halfway, I think Total decided that they were narrowing it down, I think, because we felt that they were very responsive to questions we had, and so we don't know exactly what was going on behind the scenes, but we felt that they used to turn around things quite quickly.
I see.
So then you get the feeling that maybe
You've got
they
a
are
chance.
focusing on one or two.
Yeah.
Okay, and same thing happened with Repsol. After a while, you just get the idea that because of the level of engagement and the amount of to and fro, you begin to think that maybe you are in with a chance. No, I think no company goes to its board with only one choice.
Correct.
There will probably be at least an option.
Yeah.
The board is not left with only one choice.
Yeah,
Okay,
yeah.
so I think you're always there with another one.
Understand.
So you just got to put your best foot forward.
Understand.
But so we went into this country with a very strategic intent. We're saying there are only two guys producing.
Yeah.
The economy of the country is reliant in a quite a material way in this industry.
Yeah.
It's a small place. We can learn about the environment fast, and if we can buy an existing producing asset, then it means that we have some kind of foundation in the country and relationships in the country.
Understand.
That was the concept going in there.
And it's still a hub-based concept, right?
It's a hub base. So now that will be a hub for growth going forward, because Shell is there, and we have done things with Shell before, made friends with them.
Yeah.
If there's anything they don't want to do, maybe they will think about us. Things. It's on the off chance that they but they have been there with the government for nearly 100 years.
Correct.
Right?
Exactly.
So it's not like they're just going to do anything quickly or whatever, but. Where if there's anything that you don't want to do, maybe we can do it.
Understand.
Something like that. So we just position ourselves. Not to say, I don't think we are the only ones who are positioning that way. There are others as well.
Understand.
But we at least have a chance if we are there.
Understand.
That's our thinking.
Okay, so maybe for the benefit of those who are not so familiar with the oil and gas industry, Warren Buffett has this analogy. He called it a cigar butt investing. So that means it's like someone left two puffs on the cigar, and then you can still puff it.
Okay.
Right. When we come to brownfield, is it fair for us to assume that when you take some sort of a brownfield, it's almost like you're trying to take as many puffs left of that cigar, right? And then you feel that instead of two puffs, because you're efficient, then you can actually make it 4 puffs. Is that a good analogy that I would make out of the business model you have?
Yes, in a sense.
Okay.
But again, I would say if you look at Anasuria, the first asset, when we bought it in 2015, 2016, the life of the asset anticipated not to go past 2025. Today we are in 2025, and we think we can go to 2030, 2035. Okay? If you look at the Repsol assets in Malaysia, we bought it with 5 years left on the license. Today there's 23 years left on the license because we extended it. So you must have some, to be fair, that one we thought if we got a 5 or 10 year extension, that would be great.
Yeah.
If we got a 20-year extension, we are blessed.
Yeah, it's like manna from heaven kind of thing.
Well, yeah, something like that, right? But so I think that is the process. You got to just, who was it who said, you're talking about Warren Buffett?
Yeah, Warren Buffett.
I would maybe go to golf and say, what was it Jack Nicklaus said? The more I practice, the luckier I get.
Yeah, that's right.
Yeah, so I think the harder you work, maybe the luckier you get. Yeah. Maybe so. Yeah.
How do you really? I mean, maybe for the benefit of the audience, how do you extend a field life? Is it really understanding the geology better than anyone else, or understanding production, controls better? Or, I mean, not to delve too much into the technical part, but how do you? Yes, you get the extension, but if it's producing more seawater, producing more contaminants and all that kind of thing, is it really dark art or something? I mean, I'm just coming out. Like, how do you really extend the field life? Is it like the major operators missed it, but you guys know how to like extend the life? You're putting life support and then extending it. I don't know. Would that be a good analogy to put it?
I don't know about that.
Yeah.
I think you just got to understand that there's no silver bullet. You got to look, if you want to save $1, you look at 10 ways to save 10 cents. You don't look at 2 ways to save 50 cents.
Okay.
So the type of mindset that we have to inculcate, and that's work in progress every day. It's work in progress in the
Understand.
organization. Is that you have to keep on creating value in many directions.
I see.
You work at the revenue line, you work at the cost line, you work at the efficiency line, the operations people. I mean, when we have taken over an asset that was running at maybe 70% uptime, at that point you just say, wow, 10% improvement in uptime, and we've got 10% improvement in production, and blah blah blah. So we look at it and say, okay, then you go and do your root cause. Why is it that this uptime is so low? What can we do better? What are the small things, and can we do it quicker? It's just so many little elements, and having the people who chase those opportunities record it, and it becomes an operating rhythm in the company. You just keep going and going and going and going, and it's so horribly boring maybe.
Yeah, I know.
But if you see that kind of how that type of discipline can come out with something valuable, just keep going.
It's like chiseling
away, and then finally a piece of art comes out. Kind of thing.
Yeah.
It's that kind of thing. It's just chisel, little pieces, and that's all it is actually.
Okay.
So there's no secret, and I think you just have to set the goals, the KPIs, and you must never what was the word?
Waver?
I would just say never doubt the power of human spirit. The other day, right? We were tossing around a few ideas. We have in 2021 we were producing 9,000 barrels a day. Okay, and we were asking ourselves in 2021. Where should we be in 2026, 5 years from now? And we said, okay, let's try for 35 to 50,000 barrels a day. When you're at 9, okay? When you're at 9 and you're trying to get to 35,000 in 4 to 5 years, that's not, and it's like pie in the sky.
So far-fetched that
exactly, exactly.
Yeah.
Okay, exactly.
Yeah.
So, but today we are at the bottom end of the 35.
Nice.
Okay, in some way or the other, because people had an objective, and then you have people who are motivated, then you give them a sense of purpose, they will work and try to. They've got their sense of pride, right?
Nice.
They want to try to achieve it also.
Yeah.
So we are getting there. So now 2025, we're thinking about 2030. And again, we sat down the other day, maybe a month ago, and we were trying to say, okay, we've got to launch another target for 2030, because that means a whole bunch of plans. This is the foundation now. We've got all these new licenses. We're in a new country in Brunei, and we've got all this ESG stuff that's come up, and how do we do all of this, right?
Yes.
So we set some objectives, and we put it back to the team. Say, okay, so one team sets the objective, the other team, we say, go away. And you can't believe what you get back. It is just amazing.
Understand.
Okay, it's just amazing.
Understand.
People go away and they put in effort, and they really try to move the envelope. And that just gives a huge amount of, pride.
Pride,
for everybody in the team. They say, okay, they're finding a way. And if they can, now they've identified the opportunity. Now let's go with what are the problems. Now we go one level low. What are the problems with trying to achieve this? Now we address the problems, and how we, so you just
set the strategy at 50,000 feet and start drilling down.
How do you get there?
Yeah.
Kind of thing. What's the pathway?
Yeah.
Each way, and then there's the whole picture come together.
Yeah.
How do you make sure you don't overgear? How do you all of those questions?
Understand.
They're doing it now.
Nice.
Okay. Yeah.
Nice. Doc, I'm gonna branch into a team, two things: a team of ESG, and the other one would be about valuations, because it's something that I guess even people I meet in the industry, like, how on earth Hibiscus firing on all cylinders are being valued at 3 times, 4 times, right, forward earnings? And is that something that worries you? Is that something that, like, I mean, this is really the elephant in the room, I think, even to the investors. So what are your thoughts on it, actually? You think market is not pricing you guys efficiently, or do you think that there's more work to be done on your end?
So a year ago, we were at 250 with an additional 800 million ringgit on our market cap.
Mm.
Oil price has not moved much,
Yeah.
a little bit, okay? Oil price has gone down, but it should not account for that type of drop in valuation. So what we noticed was this: when we announced that the Total transaction, there were some negative reports in the market, and that caused an entry of short sellers.
I see.
Okay, and and if you look at our short selling statistics, which are out there, Bursa puts it out every night, the amount of shorts, the short selling started mid of last year and only ended in February this year. In that process, share price went from something like 250, 260, all the way down to 137. Just short selling. Short selling and just messing around with our shares. We bought back in that period, I think 70 odd million shares, 130 nearly million ringgit spent. We were fortunate enough, not many companies could buy back over that type of period, that amount of shares, but we managed to do so. We bought back some shares because we just thought this was just crazy valuations. And these shares have been cancelled. We have compared ourselves with the peer average from across the world, different exchanges, and in every metric that is material, we have outperformed all our peers. Okay, so what the biggest damage done through the short selling was that we were removed from the MSCI along with other companies in the end of February, and some of the names we lost from our shareholder register institutions were good names to have. But what we also learned from the short selling process is because short sellers have to get shares from somewhere, they borrow shares to short. Right?
That's right.
Yeah, so short seller, what we realized from this process is our most loyal shareholders are retail shareholders. They don't loan shares.
Yeah.
They're not allowed to loan shares. It's the institutions that loan shares.
That's right.
And are party to all of this type of thing. So we have lost some institutions, but we look at it as having gained a lot of retailers. Retailers, when they come in, some will trade. Some will be the proprietary day traders, and they do all of that.
Yeah.
Fair enough.
Yeah.
That's how they...
That's their rice ball.
Yeah, that's their rice ball. They make some money every day,
Yeah.
30, 40 ringgit, 100 ringgit, and they're very happy. And,
Yeah.
and they pass time too. Okay?
Yes.
So they're happy. And some a little bit more. But others, they look at you as a savings plan, actually. And they will never, ever do anything that would hurt the company because they put some money in there and they put it away for some time. So we have got shareholders today who have been with us for 15 years straight.
Wow.
And they still come to physical AGMs. They still come to virtual AGMs. And they write to us and say all kinds of stuff. Oh, my daughter's looking for a job and this and that. They almost treat it like their company. Okay.
Nice.
And so you really appreciate these shareholders.
Yeah.
Okay.
Yeah.
So, and whenever I go to when Tan Ting Bu invites us to go and do his iCapital thingy, and when I come out of that thingy, I'll just be cornered by a whole bunch of them. Shareholders who just...
Photo, Dr. Ken,
No doubt. And then the next day, LinkedIn or Facebook will have all these pictures around the place, you know. But it's just fun to engage with them. Okay. But there is also the fact that, and I go as far as to say we're one of the few really, truly public companies in Malaysia because the largest shareholders own about 25% of the company.
Nice.
And the rest of it is all in the public space.
Yeah.
Okay, so what you see is what it is. Are we undervalued? Should we be valued 3 times? I don't. I think if you just go to our website, look at the investor presentation, and you will see we are half our peers.
Yeah.
Okay, and I think that comes from being the only one in Malaysia actually with this type of business, this type of structure, and not enough top analyst coverage. Maybe I'm talking about the big company, the big analysts.
the Goldmans and the JPs.
Yeah. But thank God we have Raymond Yap from CGS who knows the oil and gas business very well.
Yes.
And he really does take his time to understand the company. So I value his views. And
Yeah,
his
I think
views.
Raymond, if you're listening,
No, but I value his views because he does the work.
Yes,
He does the work. He understands. I think he interviewed me at least 2 times for many hours with tough questions.
Yeah.
But always done in a very, very respectable and respectful and polite way.
Yeah.
So I can't say enough good things. And he came out with a very big report on the company. So you feel like he did his work.
Great.
And I think he came out with a valuation of north of 250, nearly 270.
Understand. So, okay, great. Next on the broader theme of ESG, I think all oil and gas companies suffer from this kind of image. I mean, I've followed many of the presentations you've done personally, and even Hibiscus, and even other oil and gas players. There's always this struggle of an image for an oil and gas company. But if you look at cash flow generation as a business, you go to solar, you're not going to get a kind of IRR returns, and yet you get,
a big PE return.
Yeah, that's right. That's right.
Yeah, go on.
PE expansion, valuation
correct,
to the sky, but
yeah,
right.
Yeah.
But again, there's this negative connotation about oil and gas. And what would you say to that? I mean, being responsible corporate citizens, you don't hear of. I don't like to use it as an example. You don't have a Deepwater Horizon kind of event here, right? I think that goes back to people take it as for granted, the safety and all that kind of thing. But what would you say to negative naysayers of ESG? Because that's where funding will dry up, because it's like, oil and gas, you're dirty. Perception of an investor, there's no ESG team if I invest in an oil and gas company. So your thoughts?
ESG is a measure of how good you are as a corporate entity, isn't it? They're trying to measure your goodness.
Correct.
Okay, so there are many elements. I think for Malaysia, we should not, and I've said this before in public forums, I think we should not be ESG oriented. I think we should be GS&E oriented. I think first, make sure your governance in your company is good. Step 1, okay? If you have good governance, you will be responsible. And you will do the responsible things for shareholders.
Yeah.
Okay? You will do the responsible thing for the environment. So start with G, okay? Then make sure your S part is good, because no point you saying you're cleaning up in the environment when some guy over in Sabah is walking 10 kilometers to school without breakfast.
Yeah.
Okay? So forget about talking about cleaning up the space. Think about the person who's going to school with no breakfast.
That's right.
Okay? So we can do something about that. So we focus on that and things like that.
Understand.
Think about those people who were not fortunate enough to get vaccination against certain medical issues or medications. We can do something about that. So we think G, S, and then E. And E, we think about emissions, actually, not environment. We just think emissions. Safety, for us, it doesn't even come into the picture, because if you have no safety, you're not in this business.
You can't do E&P business,
You don't
man.
even do this business, okay? If you're not going to value safety. So safety for us is just part of being in this business, okay? So that's how we look at it. And governance first in the organization, be extremely strict on that. Have a board that really holds true to that value, and then the rest takes care of itself, actually. So I'm a big promoter of this, okay? Then we also must be truthful about the returns from the initiatives that you do, okay? If you want to do projects, you must do it because it's giving a return to the shareholder. It must be also all around holistically benefiting. Okay, you cannot do something just to say I'm doing it because I'm trying to score a few points on a spreadsheet that somebody created. I don't think this is the right model for business.
Nice.
It's not sustainable. Okay, so in fact, your sustainability strategy must in first place be sustainable. Okay, so I've been working on a lot of stuff on how you do climate financing, and you will have to watch this space, because there will be some stuff that I will be talking about in future months on this space. Okay,
Wonderful.
But it needs a relook. It needs a paradigm shift. And all of these and why are the banks pulling out of ESG targets now? HSBC pulled out of the Glasgow Financial Alliance for Net Zero 2 weeks ago. Okay, they are the biggest European bank.
Yeah.
Okay, the U.S. banks did it the day Donald Trump became the president. Okay, many banks in Canada and the U.S. pulled out.
Yeah.
Mark Carney, who is the founder of the Global Financial Alliance for Net Zero, is now the Prime Minister of Canada, which is very resource-based country.
Yes.
So you ask yourself, it seems that certain themes are topical at certain times,
Yeah.
and then they run out of steam. Okay, they only continue with momentum if they generate something that's economically sensible. And unless you tell me, if you take away subsidies, if you take away incentives, if that business can still run, then you have a business. But if you're reliant on subsidy and you're reliant on incentives, then you have a regulatory, requirement that this regulator is going to continue funding. And for example, now the minute the Inflation Reduction Act in the US is being scrutinized, a lot of market caps of companies just went down. Once upon a time, wind companies had bigger market caps than ExxonMobil.
That's right.
That's not the same today.
Yeah.
And so I would just say, do things for the right reason.
Wonderful.
Okay. Yeah.
Probably a closing statement for Hibiscus, for yourself. Maybe a wish for the Malaysian petroleum or petrochemical industry as a whole. What would you wish for? I mean, budget's coming up. What do you think are incentives that government can do to help the ecosystem better? I mean, we started off with that. Maybe we want to close with probably some kind of a wish list for improving the Malaysian petroleum economy.
As a Malaysian, obviously you would like that there's no uncertainty about the legal framework around the Malaysian oil and gas industry. Okay, there's some fragmentation now as to East Malaysia, West Malaysia, and all of that. I think if we want to really develop the industry, there must be a lot of clarity about that. And I think Malaysia is now a magnet for attracting investment. And I think if we have a very clear, legal and regulatory framework, that would be very helpful. And I also think that we must understand that Petronas is 50 years old, is recognized globally. They've done an immense piece of work for Malaysia, been a huge contributor as a corporation to the government and to the people of Malaysia. And they have been a safe pair of hands for this industry. So we should not
take it for granted.
Rock that foundation that has been built. It should be kept, intact as much as possible.
Understand.
That would be my wish, because then it's easy for everyone to work and I would say the people in Petronas are doing an immense job to bring in more and more investors in apparently an industry that's supposed to be sunset.
Yeah.
So something just doesn't fit. So I think if we can just get our domestic story very clear, I think the sky's the limit for this region, actually.
Wonderful.
Okay.
Wonderful. Any parting words for yourself?
No, I just say to young people,
Yeah.
this is the best industry. If you're an engineer or a technical person, short of doing something in space, okay, if you're not working for SpaceX or NASA, best you work for an oil company.
Pays well?
No, really, it pays well, but it gives you the technical challenges, and it brings together so many technical skills.
That's right.
So for me, I think the only ones, and you ask yourself, where do you get the opportunity to work in different parts of the world doing really technically challenging stuff? Yeah. There's no two reservoirs that are the same, as you would know.
Correct.
And then there are no two technical challenges that are the same. I doubt, you might be able to build two buildings that are exactly the same, but you don't build two platforms that are exactly the same.
You're spot on.
Okay.
Spot on.
So I think that's why young people should just start coming back into this industry.
Wonderful. Yeah, okay. Yeah. It's not just a sunset as everybody says it is.
Yeah, exactly.
Dr. Kenneth, it's been an absolute pleasure. I wish I
Thank
could
you
go
very much
longer
for
and
your
longer,
time.
but perhaps around 2.
Around 2.
Yes,
Okay,
yes.
we'll do one more time. Okay.
Yeah, thank you so much again,
Thank you.
Doctor, and
Thank you.
wishing Hibiscus all the best.
Thank you, John. Thank you.
Yeah.
Cheers.